we push the PML. For those who are unaccredited, and all that fun stuff.
Yeah, it's not quite live yet. John was still futzing with it today when I talked with him, and then complaining about how much stuff he has to do. And I keep saying, well, you don't really have to do all this. But he just doesn't know. He doesn't. When you tell him you're doing too much stuff, you're too anal and all these things. He doesn't like how he can't see doing it any other way. So, and I guess the things he's been working on lately, I'm just not gonna.
He doesn't really involve that.
No, he's working on his Q3 newsletter for the CP fund. He really wants it to look really impressive in terms of formatting and all that stuff. So I just figured I'd let him do it, and then I suggested, hey, let's find an assistant for you, and then we'll split the costs on it. Because again, I'd rather have him spend time, using his talents in ways that will make us money, not just going admin crazy on all these reports and spreadsheets.
Can he delegate it, or is
I think so.
Okay. Because for some people, it's like, it's just easier to do it myself.
Yeah. Cool. Is it general trivia again?
You betcha. But this one, no, I all three answers on this one. We'll make it look smart.
It's gonna be tough.
Okay. Tell me when you're ready.
I'm ready, man. I'm always ready.
Okay. So our segments are 710, 728, 840, 917, and 510.
Okay.
All right. So just move right in with you. How's that?
Sure. So, Mark, what you been doing? Something happens.
All right.
Yeah.
Great. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Humph of Pacific Private Money. It's mono today.
It is.
Yeah. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. Winter weather, so that 5-pack tanning certificate will come in handy.
Let it snow, let it snow, let it snow.
That's right, getting into Thanksgiving and Christmas time. Those certificates are not sponsored by the radio station, but by Tan-Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is general trivia. And Mark, what have you been up to?
Hey, so welcome, Edward. Welcome, everyone listening in to the Best of Investing. We got some great stuff for you today. We're going to talk a little bit about Bitcoin a little bit later on. I came across the most fantastic article from the Real Estate Guys Radio Network newsletter that I'm going to share with you today. But I just came back from Las Vegas from the annual American Association of Private Lenders Conference. And I found it noteworthy because, I think we take, Edward, you and I have done 350 shows of the Best of Investing since August of 2010.
Well,
and we have a lot of people who, are regular listeners. But I gotta think because we're, weekend radio, drive time, people kind of looking through the radio and maybe listening to us for the first time. Introduce myself, I'm Mark Humph, president of Pacific Private Money. We are an alternative real estate finance provider. We used to be called, hard money lender, and we don't really like that term anymore. In fact, the National Association changed their name from American Association of Hard Money Lenders to American Association of Private Lenders. Well, and that's a little bit what I want to talk about in the first segment today is that our industry, the private lending industry, now it's more generally called alternative finance provider. Alternative to what? Well, alternative to banks and conventional lenders. We are filling a need thanks to, or no thanks to, the Dodd-Frank regulations that were put in place after the big recession to try to prevent the predatory lending practices from years ago. And as a result of those, many of the hard money lenders that used to be lending, prior to 2006, 10, 11, 12 years ago, a lot of them are no longer, in fact, most of them, I would say, are no longer in business. And most of the alternative finance providers, AKA private lenders you're going to find today, are new since 2008. In fact, 2008 was when Pacific Private Money was founded. And we call it Pacific Private Money because all of the real estate loans, we source our capital from private individual investors.
And it's all for real estate.
And it's all for real estate. We only make real estate secured loans. We only make real estate secured loans at a conservative loan to value. We almost never go above 70% loan to value. And we use private capital from, mostly Bay Area residents. So we have two ways that you can invest. We'll talk a little bit more about that as the show progresses. But just to give you a hint, we have a fund, a debt fund, that if you're a passive investor or you've not invested directly in notes before, you should strongly consider. And we'll give you more information about that later. But we also work with direct note investors, people who are sophisticated, have invested in your real estate professional or retired real estate professional, which many of our clients are, and you like to invest in notes, and maybe you haven't heard of us before. But at Pacific Private Money, we've originated nearly 1,300 individual notes in the last 9 years with zero losses to any of our investors. So anyway, this past weekend, I was at the American Association of Private Lenders. And so we are a legitimate business model these days. And I think it's important to note that because I still today run into real estate professionals and mortgage professionals and other people who go, oh, you mean you guys like hard money? Like, you make seconds to people, in distress and stuff like that, which is really what hard money was mostly lending to 10, 15 years ago. Why? Because the banks were lending to everybody back then. And so hard money was kind of relegated to risky land loans and development loans and making seconds to people in financial distress. Well, guess what? Out there looking for money, but that's not who we lend to, at least not at Pacific Private Money. Our business model is not to make loans to people in financial distress. Our business model is to make loans to people in a transaction that might be in distress. But most of our borrowers' average FICO score is over 700. So we actually, people come to us for speed and reliability, and because they've run out of time from their conventional source.
Can you differentiate for the audience the difference between a borrower who is in distress versus a transaction that's in distress?
A borrower in distress is someone who's got a low FICO score. They may, literally be out of capital, out of cash, but they have real estate equity. So what they really want is an equity loan. They want you to ignore everything about them, their credit, their income, their financial situation, and just make them a loan based on the equity in the property, in the real estate that they own. There are still companies that will do that, but far fewer than there were 10 years ago. And we're not fans at Pacific Private Money of making loans like that to a borrower in distress, because typically that distress situation, they just need the money now, but they really have no idea how they're going to pay us back. They don't have what we call an exit strategy. And one of the things that we want to know before we make a loan to you is, how are you going to pay us back? Because at Pacific Private Money, we like to make short-term loans. That's really our market niche. We can give you fast, reliable financing. We just would prefer that you pay us back in 12 months, and we want you to have a viable exit. We don't want to foreclose on your home. That's not, they call that loan to own, and we're not one of those lenders.
And when we get back, then I do want you to explain to the audience what a transactional distress is.
Absolutely.
So that we can
Good. Compare and contrast, as they used to say in college. I hated those questions.
Really? But you're going to love this one. All right, here's our first trivia question. Who was the final at Woodstock? So you have to go think about Woodstock, right? What was that, 1969? The first caller with the correct answer, calling 888-912-1190, is going to win that free 5-pack tanning certificate, which could be worth over $100 if I'm not mistaken. Nice. So that's our question. Who was the final act at Woodstock? Don't touch that dial. The Best of Investing is going to be right back.
I'm going to have to wild guess that one because I'm not really sure.
Make it a little easier.
That's all right.
Financial distress, and go back to your Bitcoin because you were.
Well, we will, and that could be a lengthy conversation. Maybe I'll get into that one in the third one.
Okay.
Give me the minutes again. I forgot to set up my phone so I can kind of keep tabs on it.
So, yeah. What are you looking for?
My phone.
Oh, yeah.
It's plugged into my brick, okay. My battery brick.
Okay. Oh, this chair.
Oh yeah, duh. That's right. I forgot you have the technology.
To be to build him. Remember that $6 million man?
We have the technology. That's so funny. We believe they have the technology. That's right. 30 years ago.
Okay. And if PML is not up, then we can always, have people just call you directly. Okay.
Well, they can go to it, register now.
Oh, okay. Yeah, so that's important.
Yeah,
Okay.
that's exactly right.
All right. Are you ready?
I am. What's the time on the second one?
It is 7:28.
7:28.
Ready? Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. First trivia question was, who was the final act at Woodstock?
I'm going to guess it was the Rolling Stones.
No, that's what I would have thought too. No, it was Jimi Hendrix.
Oh,
Jimi Hendrix, yeah.
nice.
And I want to make a quick mention here for the Transcendence Theater in the Luther Burbank Center. We're, oh boy, I'm trying to doing two things at once here. Okay, so we actually last week we had a special trivia contest where we're giving 2 tickets away for the Sunday 7:30 p.m. Performance. Here was the question: almost 1 in 7 girls have broken up with a guy because of this. What? Because didn't like his mom. And
Oh, that's funny.
yeah, the winner was Diane from San Francisco. And that's the
Congrats.
Transcendence Theater, yeah. Broadway Holiday
So
Spectacular.
that was the special trivia question.
That was a special one, yeah. So I don't know if you've ever seen these guys before, but they Under the Stars, they can be doing acts from Wicked and White Christmas and Les Miserables. And, yeah, very, very good. Check them out at BroadwayHolidayShow.com. That's BroadwayHolidayShow.com. They have performances December 1st, 2nd, and 3rd. Okay.
I still can't believe we're in the holiday season. It's like Thanksgiving is completely snuck up on me. It's just, it's funny because here in California, we had another one of those, Indian summers where it went from 90 to winter, like
Yeah.
overnight.
Oh, yeah, we didn't have fall.
There's no fall.
Exactly.
Oh, geez.
Okay, so Mark, we wanted to educate the audience between the difference between a distressed borrower, which you already explained, and now a transaction that's in distress.
Right. So we were talking about at the beginning of the show was the comparing and contrasting how private money lenders or alternative finance providers like Pacific Private Money tend to prefer looking for transactional distress versus borrower distress. And 10 years ago, when banks were pretty much making loans to everybody, those in this business were generally making loans to people in financial distress. And we explained how we at Pacific Private Money, we really don't like making loans to people who don't have a viable, reliable way to pay us back. There's usually 2 ways. In fact, really, there's only 2 ways, unless they win the lottery. There's really only 2 ways they're going to pay us back. They're going to sell the property that we make them a loan on. And in cases like that, they're usually buying it to remodel and flip, or they already own it. They're borrowing money to remodel and then sell it. The second way would be conventional financing. And it's funny, and we still get calls from people with 500 credit scores saying, well, my exit, the way I'm going to pay you back is I'm going to do credit repair and then get conventional financing and pay you back. And I know from experience that just, and it's a lot harder to do that than most people think. And it can take 2 to 3 years or longer to do credit repair. Now, I do believe credit repair works. There's some great companies out there that you should investigate about how to improve your credit score. But it does take time. It does take a lot of work. And it's typically not something that you can just turn around. So an example of transactional distress is one that goes by next Friday, or the borrower who's calling us is going to lose the deposit that they've got on that property. And that happens all the time. And more often than you would believe, they're in contract to purchase property, maybe for investment, maybe because they're going to move into it. And they've got conventional financing lined up. Their broker's got it all set up. And but something happens at the tail end, and it either is going to be delayed for several weeks, or they literally fell out of approval because of something that might have shown up unexpectedly on their credit, or there's all kinds of reasons. I can sit here for the rest of the show and just talk about 20 different
Things that
bizarre
happen,
things that happen.
And what is a borrower to do?
Right, what's a borrower to do? So if you absolutely positively have to close a real estate transaction by next Friday, there is no bank that's going to make you that loan. And that's why companies like Pacific Private Money, those of us in the alternative real estate finance space, exist to take advantage and help clients in need. So that's transactional distress. And typically the borrower in those situations has a good FICO, has good income, the property's awesome. I mean, we've rescued some of the most unbelievable deals, and sometimes the borrowers have 800 FICO scores and gobs of money in the bank, but not enough to close with cash, and they're reliant on that financing they thought they had lined up, and it does happen a lot. So, for more information, go check out our website at pacificprivatemoney.com. It's got information about what we do and how we do it, and of course, it has information on how to contact us by email or by phone. And but going to the that American Association of Private Lending conference in Vegas this past week, it was amazing. It's I've been going there ever since that industry formed. It's actually a relatively new industry because the industry has really flourished post Dodd-Frank, post economic mortgage meltdown and real estate recession. Those of us that have come into this business, we're running legitimate business models. We are not predatory lenders for the most part. There's still what they call bad actors out there. You're always going to find, I don't know where that term came from, but it comes up in finance all the time. Watch out for bad actors. Those are the people that are still preying on people's ignorance and practices. But most of the companies today that you will see advertising on the radio, in magazines, and elsewhere are legitimate businesses with legitimate business models. And the American Association of Private Lenders, they had their 8th conference, and out of the first one, it was 75 people. Well, this past one in Vegas was 475 people. Most of them companies in this space, many of them new since the Crowdfunding Act of 2013, which kind of broadened the scope of being able to raise capital privately via the internet, via online, through crowdfunding platforms. It's really, the whole industry of alternative lending and alternative investing. Guy with money and you want to learn how to get in on some of those high yields that you can earn on real estate secured notes and mortgage pool funds. That's what's called, that's a practice called alternative investment strategies. And it's exploding, and it's particularly because of the fact that most people are thinking that maybe the stock market is nearing a high again and is due for a correction, and that real estate prices are pretty high. And so I'm talking to people with liquidity who are saying, you know what, I want to look at a debt structure. And we'll talk about that a little bit more when we get back.
All right, here we go to our second trivia question. How many planets are between Earth and Sun? How many planets? Call 888-912-1190 for the first call with the correct answer. You're going to win that tanning certificate, which is worth a 5-pack tanning certificate. How many planets are between Earth and Sun? Don't touch that down. The best of investing will be right back.
I was watching it.
Perfect. Do you want to talk about the fund or Bitcoin, or because you
let's tease. We'll come back and talk about the fund in the 4th, but in the 3rd we'll get into the Bitcoin.
Okay. It's like the cannabis thing. It's like you know that there's just going to be some stuff that's just going to ruin it. If they're going to tax them out of business or whatever. I'm not going to do it anyway, but.
That's right.
Oh, and I had, I don't know if I told you the conversation I had, and I'll tell you in the car, remind me, with Tom Lucas.
Oh, good.
Yeah.
What's the timing on this one?
This one is 8:40. Longer one.
Good.
Ready?
Yeah.
Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. Second trivia question. How many planets are between Earth and Sun?
I think just one, Mercury, right?
No, between Earth and Sun.
Between the Earth and the Sun, right. Is Mercury between the Earth and the Sun?
Well, that's right. That's one of them. And then the other one is Venus.
Venus?
Yeah,
Oh,
there's two of them.
okay.
Yeah, because I think Mars is the one that's just
I
right
don't know
past
my
us.
solar system.
Okay.
All right, so
Okay,
this
the
was
next
2, not
question
1.
is going to be even easier, but I know you're going to get this one. Okay.
I can't strike out.
Yeah, no, you can't strike out. Okay. If you hit 1 out of 3, that's 333. That'll get you in the Hall of Fame.
That's right.
Okay, so we were teasing the audience in the beginning about Bitcoin.
That's right. So before we get back to talking about debt funds, and we'll come back in the next segment and talk about alternative investment strategies and debt funds and how they work. But before we get into that, in this section, I want to share with you this, what I thought was a really great article written by the real estate guys. You might have heard them on, they have a real estate investment talk show. If you haven't, I think they're podcasting now. They used to be live on the radio. I think certain stations, in fact, I think this station, KNOW, may still replay their radio shows on Sunday. So check them out, realestateguys.com. Russell Helms is someone who taught me a lot about this before I got into, before I started Pacific Private Money. I actually did a bunch of investing with the real estate guys. And one of my favorite quotes from Robert Helms is, "You're just one relationship away from an explosion in your business."
That's good.
That's always been one of my favorite ones. And I believe that because I do a lot of networking to grow my business, and most of the significant growth in my company, Pacific Private Money, has been made thanks to meeting just that one guy at that one event. And I think I said Russell Helms. It's Robert Helms and Russell Gray of the real estate guys. I want to make sure I give them the appropriate, but kudos on this article. So here, they started out the article was, is Bitcoin going to crash like tech stocks and housing did? And so it goes to talk about, well, the first sentence after that is not necessarily, though we wouldn't be surprised.
Okay.
The
bets on that.
So, the price of anything is always the direct result of supply and demand. Of course, if you want something, but you can't pay for it, you can't have it. And when demand exceeds supply, prices are likely to get bid up. And if you add capacity to pay to a demand, that's overwhelming supply. Prices can go up hyperbolically, which seems to be happening with Bitcoin.
And is Bitcoin supply?
Well, that's what they say. I mean, and again, I don't know enough about the underlying structure of how Bitcoin works to know that, but I think it's like 21 million Bitcoin is the cap. So it supposedly is a finite supply. But so bubbles form when enthusiasm for a particular asset causes bidders to cross over from buying fundamentals to buying momentum.
Gotcha.
And we all remember what happened. So fundamentals versus momentum. What happened when tech stocks first came out in the 90s, and there was this, remember the talk about, it's a new economy, and those fundamentals don't apply anymore. It was old-fashioned concepts like revenue and profit fell by the wayside. So we know what happened to tech stocks. Ultimately, the bottom fell out. People realized there was no there, and a lot of money, or hopefully they were only they were playing with house money or play money and didn't get hurt too bad like you and I did. I didn't have a whole lot of exposure, but I played around a little bit.
But I know some people.
I had less than $10,000 in tech stocks at that time, and they were soon worth about 25 cents the whole portfolio. Real estate. The real estate bubble was similar. Different with real estate prices in the early 2000s. The price boom was fueled almost exclusively by debt, specifically mortgage-backed securities. And we know what happened there. All the cheap money that was fueled from Wall Street, because of that, Main Street was buying real estate without regard to their own income or the rental income of the property. All that mattered was prices were going up in real estate. And remember, people were saying, well, they're not making any more land. So with the tech bubble, this is a new economy. The old fundamentals don't apply. With real estate, they're not making any more land, so prices are going to continue to go up. Well, all was good until it wasn't, right? So we get to Bitcoin. And, in the real estate guys newsletter here, they say, we're the first to admit we've missed out on the Bitcoin boom so far. And I will say the same thing. I have yet to buy a Bitcoin. When we first heard of Bitcoin, it didn't make sense to us because it was being presented as a currency, a medium of exchange, sell things. But of course, today, almost no one is using Bitcoin as a currency. still use gold as a currency.
See, that's where.
And Bitcoin, like gold, has no earnings.
Yeah, there's no
Right?
dividends paying on it, or is that
And so, right, just as we don't consider gold an investment, but rather a place to store wealth outside the dollar, we don't think of Bitcoin as an investment either.
So also, I always thought about this with gold is, I mean, they don't really use gold that much, like in teeth or anything like that. So it doesn't have any real utility per se.
Although because it exists in a form that's finite, it does have intrinsic value.
But things that only have, I mean, there's only so much dirt on the earth too, right? And sand on the beach, you know. But the thing is, it's like, I understand it's used for money, gold is, because it's pliable, you know, it's somewhat hard, but it's soft enough that you can create coins with it. And it's pretty, you know, like diamonds, right? I mean, diamonds can cut, but they have a lot of things that can cut glass and other things. So it's again, you know, Bitcoin, just like the tulip bulbs, and just like if you and I decide, hey, you know what, let's just create our own currency.
Yeah. So the article goes on to say that here they mention it's well known that the supply of Bitcoin is allegedly limited to only 21 million Bitcoins, but we have no idea how anyone could verify this. We're admittedly ignorant. Take a look at the Bitcoin chart above, which you can't see because you're listening on the radio. But you could buy it 10 years ago for $100, and today it's worth over $7,000 per Bitcoin. So it seems apparent that something happened in the last few months to create a huge demand. And so now everyone's seeing that Bitcoin is going up for whatever reason, and they all get in to ride or chase the wave.
But again, the danger, and I think they correctly pointed it out, if nobody's really using it as a form of currency, then what's its value?
What is, I mean, right, I know. It's really scary.
When my kid was 4 years old, he painted only so many paintings too.
Right. So again, this is not an article. They're being pretty good not to bash Bitcoin or call you stupid for investing in it, because there's no way that we know of besides the price action to really know what the Bitcoin supply and demand numbers are. It seems dangerous to go all in with real money. Well, remember, just because it's going up doesn't make it safe.
Exactly. The people who bought it for 100, they sold for 7,000. My hat is off to them.
So they say if you have some money to throw away,
send
some money. We've certainly blown money on less interesting things, they go to say. So anyway, buyer beware. We have no idea what Bitcoin is and why it's going up, and I don't know.
I know. I just say I'd be watchful.
Watchful.
All right, here's our third trivia question. Mark will get this, I guarantee it. In Greek mythology, into the race of one-eyed giants. One-eyed giant in Greek mythology. All right. Call 888-912-1190 to make sure you got the right one. And Mark has the right answer. I know it.
He's got my notes.
I am. Down. All right, don't touch that dial. The best of investing. I'll be right back. And sometimes when I ask these questions, it's a little harder to figure out.
Yeah, right.
But I knew you get that one. All right, you want to talk about the fund?
Yep.
And then PML. Register.
PML.
PML. It used to be a leasing company called PLM.
Well, and there's still PLM and lending services in the East Bay. So they're a loan servicer, and they'll do loan docs. We use it for loan docs. PLM, that's Kim. So PML, PLM, and we're PML.
Oh, hey, how did it go with the credit line? Are you still looking over the docs?
No. It should be live. I don't know that it's going to be live for me this week. We were trying to get it live this week. We supplied them with everything they needed. We're getting the account open so we can transfer money into the account, but I should have it. And next week's a short week, so I don't know if I'm going to be able to actually use it for a live funding next week, but certainly the week after. But everything's it's all good.
BVAA people.
Yeah.
It went nowhere. Yeah, it went nowhere. Sorry, I can't do anything.
Yeah. Well, he might find me a little bit sexier just because I've got the business and all that stuff there. So maybe he'll do a $50,000 or $100,000 credit card or something, one of those things.
Well, West America will give me $150, but they're going to charge me $750 and 7% interest.
What's LIBOR now? Do you know? Because I've got they're charging me live. I got a quote for a $10 million credit line, which I'm still investigating this company to see if the terms and conditions are such that maybe 6 months from now that might be something to kind of move up. But it's LIBOR plus 4. So I don't know what LIBOR is. But
I think LIBOR's like 2 something.
yeah,
I think. Okay.
How many minutes?
Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. Here is our third trivia question. Mark jumping up and down the whole time because he knows it. In Greek mythology, what name was given to the race of one-eyed giants?
Cyclops.
Cyclops. That is correct.
Yes.
Okay. So, Mark, about your fund, and you also have an additional website for those who don't qualify for the fund.
So let's kind of go back full circle to what we started talking about a little bit earlier about how companies like Pacific Private Money are in the alternative finance space. We make real estate loans, but we're alternative to banks and conventional lenders because of our ability to really look at a loan request holistically and make a we listen to the call. Our gut tells us whether it's a go, no go, take it to the next level and start collecting information to what the borrower or the broker calling us says it is. And when we say holistic, it means that we can take a look at all kinds of factors as to whether or not we want to make that loan. Think of it as like what banks used to be like 60 years ago. When you'd walk into your bank, talk to your local banker, you knew who he was, you knew who you were, you told him the story, and if you liked the story and believed you could pay him back, he'd probably make you a loan.
Where George Bailey was saying, Mr. Potter, give me a loan.
That's right. And so those are the types of loans we make, loans that can be made quickly, reliably, saving a transaction or providing them an opportunity they would otherwise not be able to take advantage of, and then they pay us back. The average loan that Pacific Private Money makes gets paid back in 5 months. It's amazing. We typically write for 12, sometimes 24 months, but that's the average payback. I mean, it's pretty amazing. At least that was our experience in 2017.
Well, that really speaks to the accuracy of your underwriting because you're specifically doing loans for short term.
Yes.
And the proof is in the pudding. These people are paying you back short term.
Yeah, that's our niche. And again, and there's private lenders out there that will make 7-year, 15-year fully amortized. I mean, there's niches, and we just like to make loans, and we promote ourselves as being fast and reliable, and let us save that transaction that looks like it's not going to close because bank financing fell out. So the capital we use is from private sources, and these private individuals are practicing what's known as an alternative investment strategy. Alternative investments include things like mortgage pool funds. And at Pacific Private Money, we have a mortgage pool fund called the Pacific Private Money Fund. We were very clever with that one. Another way to invest in real estate-backed notes is to actually invest directly in those notes. And we also work with investors who prefer a direct notes over a fund, and it really is a preference. Some people prefer to be hands-off and allow the manager, especially if the manager's got a good track record like we do, to go ahead and manage the funds. And there's a number of other reasons you might choose a fund. There's things like you can reinvest your earnings if you don't need the income. You can add to your account. There's no early payoff, things like that. A fund is what we call an evergreen investment, meaning you can open up an account and keep it in there as long as you want to and take it out when you have a liquidity need. When it comes to investing in a note, people sometimes prefer to invest directly in a note because they can choose the note and the security and the borrower. You could, kick the tires, so to speak. But the challenge with that is that you have to take the monthly payments even if you don't need the interest income. And if it pays off, you have to take the money. You can't tell a person, no, I'm not taking your loan payoff, and you can't add to it. So it's a $100,000 note, it's a $100,000 note, and it's gonna, it's a 12-month term, and he may pay you back in 6 months, which is pretty common. And so whether you would like to participate in alternative investments by investing in a mortgage pool debt fund or directly in note investing, that's something that Edward and I have been calling for years. Mortgage investing, basically investing in, it's really, technically it's not even investing because you're lending your money secured by real estate. So Edward hinted that there's something new. We've got a new website launching, and that's true. We have, it's just gone live last week, and it's called Private Money Loans. If you're a note investor, if you're one who prefers to invest directly in an individual note, we have just opened up a marketplace for note investing, and it's called privatemoneyloans.com. Private Money Loans, plural.com, and we just started uploading loans that you can invest in online. The first thing you have to do is register. So go to the website, go through the registration process. We have to approve of you, but once approved, it's a fairly short approval process. Then you are able to securely log in and view the real estate notes that we have for sale. Some of them are notes that have already been funded by us and closed and are now paying, so you can buy a seasoned note. Or some of the notes on there are live fundings, meaning they haven't closed yet, but we're looking for investors who will commit to funding that loan, and you can invest in the entire note, or you can invest in fractional interests. And all the information about the property and the borrower is available for your review. And of course, if you have further questions after reviewing the information, you can call us and speak with one of our underwriters to get any other additional. But we didn't invent this idea for this website. It's actually based on on technology that's being successfully used by another private lender in Southern California, who I know very well. And in fact, I saw him at the lender conference I went to last week, and he's funded $65 million so far on his website that's based on this so-called groundbreaker technology that allows us to sell notes online. And it's a pretty cool site. You got to check it out, privatemoneyloans.com. Check it out. Now, if if this is new to you, if the idea of investing in real estate backed investments is new to you, you're probably better suited for a mortgage pool fund. In which case,
you do have to qualify for it.
But you do have to qualify for it. The qualifications for investing in a mortgage pool fund are that you need to be what's known as accredited. You must be an accredited investor. And the definition of an accredited investor is a minimum net worth of $1 million exclusive of the equity in your primary residence. So if you qualify as an accredited investor, and many of you listening are familiar with that term, you've heard that term before, you probably know if you're accredited or not, to invest in a mortgage pool fund like ours, which we advertise. The rules are, if you advertise a what's called a 506 Reg D fund, sorry for the boring acronym there, but Reg D funds, as they're also known, if you advertise them, you are only able to take in accredited investors. Investors must qualify. So again, if that's you and you want more information, please go to our website at Pacific Private Money. Of course, all one word, pacificprivatemoney.com. We've got also videos, we've got FAQs, we have all kinds of cool stuff you can check out, resources to help you learn more. We've got past podcasts of our radio show. There's all kinds of stuff that are worth for a while. You should go back because we're always adding new stuff. That's pacificprivatemoney.com.
Plus, you do not only webinars, but live in-person seminars.
I don't know if we schedule. I'm not sure we've set up the next live event yet, so we'll have to let you know. Of course, you can always call or email us and say, hey, when's the next live event? So, and we're taking the show on the road. We did the first road show recently in Walnut Creek, and a whole bunch of people came. It was really good. Was it Mountain View? Mount Garden. That's right. Okay, the next one. That's right. We're planning the next one in Walnut Creek. Sorry, but we haven't set the date yet. We'll probably do maybe another webinar because it is the holidays, maybe before the end of the year. But we have recorded on our website the last webinar that we did, and that was pretty cool. It went a little bit less than an hour with a lot of meat up front and then some Q&A on the back end with a slide. And so if you want to check that out and kind of do some voyeuristic investments or at least learning on your own, you can go to the website and check that out.
All right. When we come back, we're going to have some closing comments, so don't touch that dial. Stay tuned. You're listening to The Best of Investing.
Oh, 917 on the button.
Okay, 510 is the last one.
510. All right.
What do we want to cover in the last
Sorry,
Maybe just, the paying.
Oh,
the
yeah,
LTV.
we haven't, it's duh, we've been talking about it. We've not talked about the yield. I'm totally remiss. So I'll thank people for staying on. Hopefully hopefully you're still listening.
Hey, are you there, Joe? Are you there? So Noam's going to meet us over there.
Yeah.
I like parking in Embarcadero. It's a little easier to.
Oh, is it?
Yeah.
Okay, you can help me then figure out where to park.
Yeah, I think it's actually at for Embarcadero.
Yeah, I looked. Yeah, I looked at a past email and did confirm that it was a Fort Embarcadero, I think 2020 or something.
2200.
2200.
Okay, here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hom. So, Mark, we've been talking about the Pacific Private Money Fund for a little bit, but we haven't told the audience.
I know we've been so remiss. So thank you for staying through the hour with the Best of Investing, and we're gonna grace you with the rates of return that you can achieve through mortgage investing, whether you invest in a mortgage pool fund like the Pacific Private Money Fund, or if you elect to invest in individual notes, also known as trust deed investing in trust deeds or individual notes. And you can find individual notes on our new website, privatemoneyloans.com. So in California, the average rate being paid out on mortgage pool funds is anywhere from the mid sixes to probably the low 8% range. And part of it depends on whether that fund is using leverage to help boost the yield. So at Pacific Private Money Fund, we are a non-leveraged fund. Outside of a line of credit that we use to close and then pay back down to zero, we're an unleveraged fund, and we're paying just a tick under 8% and have been fairly consistently for the last 4 years. We launched the fund 4.5 years ago, and the range that we've paid out, and it does do a monthly distribution. So we distribute the income monthly, and the reason it fluctuates is because the actual income for that 30-day period is dependent on the portfolio of notes in the fund at that time. And because notes pay off and then we put new notes in the fund, the actual income on a month-to-month basis fluctuates, but it only fluctuates usually within a range of between like 7.5% and 8.5%, fairly consistently. But the year-to-date so far, the annualized return that we provided on the fund is just under 8%. We're probably going to end the year maybe at 7.9, 7.95, and that's for the distributed yield, meaning you're an income investor, you're investing money in the fund, you're taking monthly distributions, and then your rate you're being paid is in the high sevens. If you're a growth investor, meaning you don't need the distributions, maybe you're investing through your IRA. If you have a self-directed IRA and you're looking for a way to boost the yield in your IRA portfolio, mortgage pool funds are a great investment strategy, and you don't have to take the distributions. You can allow those earnings monthly to reinvest in the program. Then you get the magic of 12 compounding periods, and usually our growth investors get about a 20, almost a 0.25% bump in the realized earnings.
Over 8%.
Yeah, be a little bit. Well, I think last year in 2016 we're right at 8%, and I think our compounded yield is just that little bit more than 8% year to date. But and then individual notes are kind of all over the map. It really depends. Most firsts are paying between 7.5% and 8.5% to the note investor. And then junior liens, if you want to get a little bit of a boost, you don't mind doing seconds, especially if it's maybe the combined loan to value between the first and second is only 50 or 60% of the market value of the property. We like doing those loans, especially if we know that the use of the funds is to remodel the property so that I can sell it. We've got an exit strategy there, as we talked about earlier. In those, you could expect maybe to get between 8.5% and 9.5%, maybe even 10%, although a 10% yield is here in California. There's a lot of competition among companies like Pacific Private Money, and and oftentimes if we quote too high a rate, kind of scares away the borrower. They can just pick up the phone and call the guy down the street, and who will gladly take it from us and undercut our rate. so you got to be careful with that. But on average, you can figure between 7.5% and 8% expected yield on real estate secured notes and real estate secured mortgage pool funds.
For more information,
go to pacificprivatemoney.com or call us. We're right here in the Bay Area with a 415 number, 415-883-2150. We've been in real estate for over 30 years and private lending for 10 years in the Bay Area. We lend exclusively in California. Most of our loans are in Northern California. We lend where we know. We're your local regional alternative finance experts. Give us a call.
And for joining me, Mark.
Absolutely, my pleasure.
Okay, thoughts for the day. The only thing that hurts harder than a failure is not trying. And if you don't build your dream, someone else will hire you to help them build theirs.
That's right. Close your eyes and take that step. It's worth it.
I like it. Okay, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best. So long. Right, on the money. On the money.
All right. It's relatively painless and